chaotic market situations sometimes presents great advantages. How does that fit into that?
Look, I mean, there's an element of, especially in the short term, there's an element of sentiment that goes into the stock market. This is why you should not evaluate, any investment that you do in the stock market from a short-term perspective, correct? If you have an event that will drive behavior, and that behavior could become advantageous for you. So, for example, if you have an event that actually drove, company stock A to 20, 30, 40% of its actual value, it's a huge opportunity to actually either buy or increase your share in that specific company. So I take advantage of, the sentiment that goes into the market, but I don't buy and sell based on sentiment. I honestly don't care what people are actually buying or selling. I only care about, what are the right investments I need to actually invest in. So if everybody's actually selling off stock A, that doesn't mean I'm going to go and actually sell it. You need to be, from a mindset perspective, you need to be emotionally, psychologically, stable to the point where that, you don't behave according to the majority of the investors. You just need to invest and behave, rationally and disciplinedly. So you buy at the right time, and obviously you exit at the right time.
So you really have a structure of evaluation. You go about this structure of evaluation in abstract of what you call in your book beautifully, the sentiment of the herd. So what everybody's doing, so everybody's selling, it shouldn't impact or, let's say, influence your decision into selling or buying. You have your structure, you go about it without the noise, and then you come up with a decision and you do it. If it's sell while everybody's selling, then so be it. But don't add it into your decision making. That's what you're trying to say.
Look, I don't make any decision based on daily, weekly, and sometimes even monthly behavior, honestly. I make decisions based on what I believe the value of whatever business I'm investing in, with whatever stocks I'm actually buying, usually in the midterm, long-term perspective, correct? So if I buy, for example, Microsoft or Apple or Johnson & Johnson, I just look at what would be the value when I actually decide to actually sell the stock. So is the price of the stock worthy of entering now, based on the fundamental and the technical analysis that you do? And if so, will it appreciate over a period of time, and that appreciation makes sense from an investment perspective, and you actually go after it? I honestly don't care what other things about, in terms of, everybody's selling or everybody's buying, and I just need to actually play along. Sometimes it's entertaining to see how people actually behave. And I can tell you many times I get called from, friends and sometimes colleagues. They say, look, and you can sense the urgency in their tone. They're very anxious to either buy or immediately sell. And many times my advice to them is the do nothing strategy. Just don't do anything. If you have it, hold on to it. And if you don't have it and you don't believe it's the right time to actually invest, don't invest. I'm not, I don't invest based on, the daily fluctuation of the market. As I said, I invest based on fundamental, what makes sense in terms of investment in these businesses.